Hi everyone, welcome to the review of the NZSX 50. So before I jump across and share my screen, remember I do have to do the housekeeping. So this is general advice only, it's educational purposes. If you're looking for personalised financial advice, then by all means talk to your own financial advisor. The other thing too is if you're getting some value out of these videos, I'd really love your feedback. I'd love you to give me a thumbs up or some sort of comment. And by all means share it, and any comments would be great, and I can create more content for you. So let's share my screen. Right, so here we have the NZSX 50 for last week, and as you can see, we've got a very, very strong candle here. There was a lot of buying pressure, which is great, although the volume is fairly normal on that, but certainly obviously a lot of buying going on. Now, why that quite often is the official cash rate was reduced last week by 0.25%, and a lot of people think that quite often puts fear among a share market. In my view and my experience, it actually works the opposite. If you tend to have a weak cash market, and we certainly haven't got a weak cash market yet, although it is looking like that there could be further reductions as we move through this cash rate cycle in the OCR, but what it will quite often do is make the share market strong. So that is something that I've seen in my experience. And back in 2008, an anomaly was we had a strong cash market, but we also had a very strong share market. Usually they work inverse to each other. So I'll just go and pop that onto a daily chart as well. So as you can see here, the 14th, that was Wednesday, that was the date that the OCR was announced. It's usually announced about 10 o'clock in the morning. If there's any changes, of course it was reduced, and we saw a lot of buying pressure there, which like I just explained is it's good for our share market. We'll go back to the weekly. What we've also seen, I'll pop that onto the 5-year, where it is trading at the moment, we haven't, so it's broken through some more new highs. It hasn't reached all-time highs, but we're getting very, very close to that. So our all-time high was back in January 2001, so we're way off that. However, where we are at the moment, that was back at around January 2022. So we've come a long way, okay, which is really, really good. It's really encouraging. Let's put our moving averages on. We've put our 30-week. As you can see there, we're certainly trading above that, which is a very good sign. And we'll also put on our 15-week. Okay, so it's trading above both of those. I'll just change this back to the 2-year chart. It just gives us a clearer picture. Like I said this, and I've said this in previous videos, the 15-week moving average crossed through the 30-week back in January this year. Got close just a few weeks ago, or back at the end of June, to fall through because we went through a sideways trading pattern. However, now we've started to see, obviously, it's gaining again, which is great news. The other thing that you need to be aware of, though, is not all shares are driving this growth. We're only seeing a handful of them, and we're seeing our banking sector, both Westpac and ANZ, have been very strong performers, and we're also seeing some of our utility companies. It's probably only about 6 or 8 shares that are driving the performance on this share market, so we're not in an overall bull market because normally you'll have a lot more participation. So it's interesting, out of 50 companies that we've probably got 8 or so that are driving this market. But at the same time, it is encouraging. So I hope that's helped. On Thursday, I'm actually going to do vital healthcare properties. So come back and take a look at that, especially if you're into the property sector. And like I just said, if there's any share that you would like me to review, happy to do that for you. Drop me a note in the comments. Take care.